We are ready to go live.
Yeah, let me know.
Yeah, we can start.
Yeah, good morning and thanks everyone to join this special webinar which is arranged for MTF Masterclass. So we will discover the power of margin trading and try to understand what are the open calls from HDFC securities to trade in for short term as well as for the positional idea. And we will try to know the concept of the MTF, how it works, what are the benefit, what are the risk involved in it, and how can we leverage our trading positions with the help of MTF. That is the ultimate agenda of today's webinar. Myself, Vinay Rajani from Prime Research of HDFC Securities, and I am going to show you the recent calls which have been published by research department under MTF category, and we will also understand the different products we are catering to our clients under the MTF category. So without much ado, I am starting my presentation. And the last, I will also share our technical view on the markets, how Nifty is looking from here, how markets are performing, and what is the view ahead. So we will also throw some light what is our view for the next 10 to 15 days. That will help us to understand the overall market situation, and that will also help us to take the position in MTF also in the trading positions. So first of all, what is margin trading facility? So basically, margin trading facility allows investors to buy stocks by paying only a portion of the total cost, with the remaining amount funded by HSL, which charges interest on the loan. So basically, in derivatives, we used to get the leverage. So we are paying around 30-40% margin on derivatives. Here also in cash segment, if you want to trade some stocks, you have a facility to pay only 30-40% of the amount, and rest of the amount will be funded by a broking firm like HSL, and the interest on margin will be charged by the company. So there are many benefits which you can leverage when you have confidence you want to take position. You can just pay 30-40% margin on particular stock, and you can get 100% quantity in your portfolio. So this is one facility which is very useful in whenever we have a good momentum in the market. This provides a higher buying power and can amplify both potential profits and losses due to the leverage offer. So as I said, there is a leverage facility that HSL is providing to to the clients, and similar like the derivative here, we are also getting the leverage facility. MTF is a product. 1 minute. Let me. Yeah. So MTF is a product approved by exchanges and is generally suited for experienced investor with a high risk appetite, as it carries significant risk if stock price decline. So leverage is having benefits also, and the loopholes also, like if market is not in favor and something goes wrong and against our expectations, then if market goes down, stock goes down, the loss also increases, because you have to pay interest on your margin, which the broking firm has funded, and you have to also bear the loss of the total positions taken. So that is also a risk involved in the MTF facility. So we have to be very we have to follow the risk management also while using the MTF product. So benefits of the MTF products are like increased buying power. You can purchase more shares, allowing for larger position with the limited capital. Amplified profits. So leverage magnifies the returns when stock prices move favorably. So if stock goes up by 5%, so you will get around, if you have paid 40% margin on 100% position, then definitely that will magnify your profit also, because you are getting higher profits in higher number of quantities as compared to which you have originally paid. Flexibility is there. Position can be held for longer periods compared to intraday trading. So it is not limited to a certain time. Like you can hold MTF positions by paying margins with 1 week, 1 month, even 6 months, even 365 days can be also availed for the MTF facility. So risk, what are the risks which are involved in the MTF position? So just as profit are amplified, losses also increase the proportionally when prices fall. So suppose you have paid only 40 rupees for 100 rupees quantity. If stock goes down, you have to bear the loss on the entire 100 rupees quantity. And also you have to pay the margin, pay the interest on the margin which has been funded by the broking firm. So that is also one of the major risk while things are not going in our favor. sometimes force selling. So if you are not able to square off the position because you are already in a loss, then square off forcefully force square off can happen from the broking firm which has funded your position to avail the requirement margins for the broking. If the stock price declines, the broker may liquidate your position to recover their funds, especially if additional collateral is not provided. So you have to maintain additional collateral. If it is not there, brokers are forced to liquidate your position just to maintain the required margin by the exchanges. So interest cost, you will pay interest on the borrowed amount, which adds the overall cost of the trade. That means if you have bought something on the leverage on MTF and stock is not moving for let's say 1 or 2 months, it is there only around your cost only. So though it is not giving any loss also and not profit also, but you are losing somehow by paying interest on the margins you are availed from the broker. So here you are getting the interest cost extra because you have taken leverage position. So this is one of the risk which is involved, and professional traders should understand this risk in the MTF position. So you have to be right while selecting the market trend for going for this MTF product. And MTF product is only a long only product. If market is supporting and the trend is on the upside, then only you can utilize this product. If markets are consolidating, if markets are not into uptrend, they are actually going down, then MTF product, as I said, it is a long only product. It is not going to benefit in those scenarios. So while going up only, uptrends only, we can utilize this MTF product. This is one of the risk, or you can say loophole for this particular product. So what we are offering as a MTF in the by the Prime Research Department of HDFC Securities. So basically, looking at the market condition in the year 2025, starting of the 25 only, we introduced a product of short-term MTFs where we are covering around 1,000. Now it is around 1150 stocks. So more than 1,000 stocks are there in the universe, which is a part of MTF of HSL. We are covering that, and we have a short term view around 1 week to maximum 15 days. We are having that view. So this is a short term short term MTF calls for mid cap category, and there we keep 10 days as a time frame maximum. So this is to show the short-term swing ideas and volatility of market uncertainty. So total number of calls given by the research department in this category is around 25 to 30 per month. And expected return for the each recommendation has been around 4 to 7% depending on the market trend. So usually we give 7% target in the short-term MTF. It is a if it is a part of mid cap. We also do provide short-term MTF calls in the large cap category that follows the universe of NSE 200 and derivative stocks. So basically NSE 200 and derivative stocks are the liquid stocks and bigger stocks where most of the clients are also want the calls to come in and they get the stocks at right price and good liquidity is there. So we started giving short-term MTF calls in large cap category as well. So this, as I said, NSE 200 is the universe. The time frame remains up to 15 days. And this is to serve the short-term swing ideas and volatility in the market uncertainty in the large cap segment. Total number of calls that we have been publishing is around 10 to 12 in this particular category. Expected return for this category is around 3 to 5%. So if we are getting 3 to 5% in 1 week or 2 week, we used to book the profits. So targets used to be around 5 to 6% maximum, depending on the market condition. Now, other products like positional MTF also. So suppose market is are in favor, and if we see a good alpha generation in short term, we used to come out with a positional idea, which usually has the bigger target than short term MTF. So here also we have a mid cap category as well as the large cap category. In mid cap category, we have around 1150 stocks available in for the MTF in the HDFC securities. Time frame remains around 2 months for the mid cap category positional ideas, and purpose is to serve the swing ideas and volatility for next 2 months. So total number of calls per month we used to give is around 15. So obviously, if market is not in favor, if it is consolidating, the number of calls will remain less. And if market is going down, we will avoid coming out with the ideas, because if we come out long calls in the falling market, then definitely it will turn out to be a negative recommendations. So we used to reduce the recommendations in case markets are consolidating and in case markets are falling. The expected return for the mid cap category in the positional idea has been around 8 to 15%, depending on the market condition. So we come out with the two targets in MTF positional. Around first target used to be around 8 to 10%. Second target used to be around 15 to 17%. The positional MTF ideas in the large cap category. Here also we are coming out with the large cap calls from Nifty or Nifty 100. In fact, Nifty 200, all the derivative stocks. We give recommendation in the cash segment as MTF, and the time frame remains around 45 days. Purpose is same like mid cap. We used to catch the swings which are possible and which can generate the alpha for the short term in the large cap stocks. The total number of calls that we are giving in this particular category are 7 to 10 calls per month. Again, as I said, this is depending on the market condition. In falling market or consolidating market, the recommendation will go down because this scenario is not favoring. The expected return in the large cap positional ideas of the MTF used to around 7 to 12%. So we keep around 6 to 7% first target, and 10 to 12% is the second target for large cap MTF positional calls. Another important product which we started in year 2025 is the MTF calls in the ETF segment. So we all know that ETF as a product has been gaining popularity a lot amongst the retail traders nowadays, because ETFs are the exchanges are offering ETFs in many sectors. So if you have bullish view on particular sector, and if you want to utilize that view, you can come out and utilize that view with buying a sector ETFs, or benchmark ETFs are also available. So if you are bullish on Nifty, you can buy Nifty ETF. If we are bullish on banks, you can buy banks ETF. We have PSU banks ETFs also, and oil and gas ETFs, then auto ETFs. Everything is available. Almost all the sectors provided by the exchange are there in the ETF segment, and that is being captured by our recommendation from HSL as a MTF position. So before that, previously we did not have MTF feature available in the ETF segment. Now we have more than 75 ETFs which are available in the MTF category under HSL product. So this is very important product which is gaining popularity day by day, and we have started giving more calls in the ETF segment also. So ETFs on indices from MTF universe. Focus is to give liquid top 15 liquid index and sector ETFs. So we don't give any ETF which is having less liquidity. We always focus on the highly liquid ETFs, which can be bought easily and sold easily. Time frame remains around 3 months. Here the time usually remains higher because the movement in the ETFs are not like stocks. They may take longer time, and that's why we keep 3 months positional view in this ETF segment. Now the total number of calls per year is 12, but now we have revised this because we are not, because as we have got more requirement of giving calls in the ETF segment. In fact, we have increased from 12 to 25 in recent past. So many calls we have planned to come out with in ETF segment. Expected return is around 4 to 5%. So if somebody is getting 4 to 5% in the index, then it is more than enough, because the margin being charged by the brokerages, brokers are very less in this particular segment. They are available 25% to 30% margin right now. So on less margin, you can get higher quantity, and 4 to 5% return used to be there in the ETF segment, which is provided by Prime Research. So here I would like to show one example how MTF works for particular stock and particular recommendation which is being given by the Prime Research. So this is one example which was given in the August 25. This is nothing but the Unominda. So MTF positional pick was given on Unominda between 1113 to 1125. This was the buying range. This was the CMP at that time, 1113. Average, the dip price was 1065, stop loss was 1045, and target was 1195. Time frame was up to 45 days. Because it is one of the large cap stocks available in NSE 200, we kept a time frame of 45 days. So on 18th August, after 3-4 session, we saw that Unominda achieved our first target of 1195. The buy call was given on 13 August. So yield was around 7.33% at first target. On the same day itself, we booked it entirely because it almost there in the second target. So we gave the book full profit in Unominda around 1230, which actually yielded around 11% in the large cap MTF category on the same day. So after 3 4 days of given recommendation, we booked it with a gain of 11% almost. So how it works actually? So suppose you have 1 lakh invested with the leverage position of, so if you have 1 lakh rupees with you, you can buy worth of 2.5 lakhs because we are charging around 30 to 40%. We are just taking 30 to 40% margin requirement for this particular stock. It is a large cap stock. So in worth of 1 lakh rupees of capital, you will be getting a quantity of 2.5 lakhs here with 40% margin available. Now, suppose first target is achieved, first profit, then net profit earned is around 9174. So whatever you quantity you got it in the worth of 2.5 lakh rupees, half of the quantity you are selling at first target. So in the half of the quantity which you got, you will get a profit of 9174. And from that, we have to less the interest, which is deduct the interest which is being charged by the broker. And the time duration was 5 days, and we are charging around 12 to 14% on the interest on the margin. So this interest part will be deducted for 5 days. So we have used this position for the 5 days. So interest will be charged accordingly, depending on the time that call has taken. So 12 to 14% interest will be deducted from the net profit which we have earned. So this is just a 50% of the position. Now, suppose these on the same day itself, stock further extended its rise, and we booked profit on the around, as we see here, 1230 over the second target near that. So in the second part of rest of the 50% we booked again. Here we got the profit of 13170 because obviously it is a higher price than the first target. We have to deduct the again the interest margin on the total quantity we have. So what happens is that in the total gain in your total position would be A plus B, the scenario one and scenario A is where we booked profit partially at the first target, and B is the we booked the entire position with the total quantity. So the A plus B, so 9174 plus 13170, total comes to 22344. So 22,344 was the total profit, and 478 rupees is the interest on margin. So whatever leverage we have taken, the 60% leverage which has been provided by HSL, we are paying only 478 rupees as a margin to the as an interest to the broker, and that will be deducted. So the net profit after interest will remain at 21,866. So almost you can say on 1 lakh rupee investment, you have got and 22% in 40 on only 4 days. So you invested only 1 lakh rupees out in 1 lakh rupees, you got a quantity of 2.5 lakh rupees because of the leverage of the MTF. And in total position of 1 lakh, which you started with, you got 22% returns because the 22,000 is a profit. So 22% in 4 days of time frame is a very good return in large cap ideas like Unominda, which we gave on in the month of August. So this is how it works, and this is the how we offer this particular product in most of the stocks. There are around more than 1100 stocks available in MTA category. So here I would like to discuss about the number of the open calls from the MTF category. So these are the open short-term MTF calls having time frame of 10 to 15 days. So mix of stocks are there from large caps and mid caps. So one of the stock is M&M, which is obviously a nifty stock. Then you can see Motherson is also a top 200 stock, one of the large cap. Indian Bank is also one of the large cap which is available. Sonacom is also belongs to the NSE 200 category. NBCC is again a large cap company. So we can see there are 8 recommendations open in the short term MTF, and this can be utilized. We used to share this list every day in our morning research report. So you will get all the recommendations here with the target and stop losses. So these are the mix of stocks from large cap, small cap. Some of them are auto stocks, some of them are IT, as well as the banking stocks. And you can see the list of here. You can get this entire list from our daily morning research report every weekday, and the time frame and potential upside from the current market price is also shared. So these are the short term MTF ideas. The positional MTF ideas also we do have in this market, and most of them are large caps. You can see that Motilal Oswal is a large cap company. Adani Ports is one of the Nifty company. Then Central Bank belongs to the NSE 200 category. Tata Communication, IDBI. Here we have PSU Bank Bs as a MTF ETF positions open. So recently we have come out with a PSU Bank Bs as a recommendation, where we can see the first target is around 100. So we are expecting around 5% upside from current level, and the next target around 104. So one ETF is also available in the MTF category. This Sandur Manganese from the mid cap category, and Kotak Bank. So Kotak Bank was issued yesterday itself on Friday. We came out with a positional idea. So our view has been bullish on the banks. So we want to capture that total our view with the giving recommendation in private as well as PSU banks. So PSU banks we already given. Kotak Bank has been issued, and the first target is 2270 and second target is 2340, and upside is around 10%. And we have kept a 45 days time frame for this particular stock. So entire range of stocks and sectors we have covered in the positional ETFs also, MTFs also. So here I would like to show and discuss about the how markets are looking from here, because it is also important to know where we are headed and what is the trend of the market, which sectors, which benchmarks indices are outperforming and which benchmark indices are actually underperforming. So I would like to show the overall view on the market. So on the screen you can see this is a Nifty daily chart, and recently we have registered a new all-time high in the Nifty. 26310 was the all-time high recently registered, and for last two trading session Nifty has been into consolidation. So obviously Nifty has shown a nice recovery from the lower level, and the September 2024 high has been taken out. So obviously it took a long time. It took around 269 session for Nifty to register a new all-time high, but gradually we are moving up. That is a good sign because we have a positive global cues, and some other cues are supporting the overall equity markets across the world. India and markets are also trying to catch up the rally. So yes, overall trend has been good. The support for Nifty we see here is around 25,800 odd level. So 25,800 is a strong base for the Nifty. So a couple of days back we saw that that was the low, and from that level Nifty recovered sharply. So we suggest that 25,800 is a very strong support. Previously in our technical and derivative webinar, we discussed the potential target for Nifty around 26,600. So 26,600 that we are actually aiming right now. But if we go by the derivative wise position rollover analysis, the maximum open interest stands near 27,000 in the call side. That means 27,000 is a derivative wise strong resistance. So we can expect targets for Nifty from 26,600 to 27,000 from here on in the next couple of fortnights. So overall view remains bullish for the Nifty. That is what we see. And Bank Nifty, yes, definitely Bank Nifty has been an outperformer, and it is trading continuously registering new all-time high. So that is holding its uptrend. You can see this is the monthly chart of Bank Nifty, and that looks stronger on the charts. So Bank Nifty has taken lead, and it is likely to continue like that. And some other observation also I want to show you here. Now, the fact of the matter is that even though Nifty is at all-time high, the traders are not able to generate that much alpha in this particular market, because cash stocks are actually not moving. Only Nifty stocks are moving up. Only 5, 7 stocks in the Nifty universe are giving support to the market, and because of that, Nifty is making new all-time high. But somehow the breadth of the market is not supporting. That is quite weak in this scenario. So this is nothing but the percentage of stocks about 20 DMA, 50 DMA, and 100 DMA. That gives us an idea how the broader market is participating. So we can see over here, this is the number which is showing the percentage of stocks about 20 DMA. So only 38% of the stocks from NSE 500 are trading above the 20 DMA. That means the participation is very less. In the when Nifty is trading at all-time high, the stocks trading about 20 DMAs are only 38%. Any number below 50% is a bearish scenario, we can say, by going by the theory. If we consider the 50 DMA, percentage of stocks above 50 DMA are only 42%, and percentage of stocks above 100 DMA are only 43%. That means all these three parameters in the moving average, going by the NSE 500 universe, all three numbers are below 50%. That means very less participation is there in the market. Very few stocks are pulling the index on the upside, but actually traders are not generating momentum and alpha in this particular segment. So cash segment is struggling even if the markets are at all-time high, benchmarks are at all-time high. So this is a bit challenging time for the traders. So the kind of returns we generated in the previous times in the MTF category and trading calls, that are not being generated, frankly speaking, because of the lack of momentum in the broader markets. That is what we are actually looking for. We are waiting for to that scenario to reverse, and that is not happening till now. Hopefully the coming days will be good for the mid cap small cap, but as of now the situation is not the best for the markets to churn the stocks in the mid cap and small cap segments. Huh. This is what the scenario is. This is a ratio chart between Nifty and small cap. So if we divide Nifty by Nifty 500, not small cap, this is Nifty by Nifty 500. So this ratio chart suggests that Nifty had started outperforming. If this chart is going up, that means Nifty outperforming this Nifty 500 index. So there we have seen this horizontal trend line breakout. What does this suggest is that in the coming time also, there will be higher chance and higher probability of generating return in the Nifty rather than Nifty 500. So we don't expect significant outperformance from the broader markets in the coming time as well, because this is a breakout on the Nifty chart against the Nifty 500. That means it is clearly suggesting that in last 4 years, whatever outperformance we witnessed in the small cap and mid cap, the mean reversion of the same has been happening, and Nifty is trying to catch up that relative performance with this Nifty 500. That means in the coming times, only large cap stocks will give higher returns. So it is better to allocate more capital in the large caps in your portfolio as compared to mid cap and small caps, because these trend of the micro cap 250 small cap index has not been that great, and not like a Nifty or Sensex. So better to keep more weight and more allocation in the large cap stocks in the coming times. So this is what we wanted to share, and thank you everyone. And For joining this webinar. I hope this will help you in taking the position in the coming days in the MTF category. And I hope it will be very profitable days ahead for you all, guys. Thank you, everyone. Ravi, if you want to take up any questions, we can give 2-3 minutes for question and answer.
Yes, there are questions there in the chat box. You want to take them?
1 minute. Huh? I cannot see any particular question.
Okay, the question is MTF considered as delivery trades and charges of brokerage services and DP charges are levied?
Yes, so obviously the delivery charges will be levied, and this additional cost of interest will be levied on that. So suppose it will be considered as a regular quantity. So if you are investing 1 lakh rupees, and if you are getting a leverage of 2.5 lakhs, so basically 40% margin. So entire quantity will be having brokerage brokerage charges, and as well as additional to that, you have to pay the interest on the MTF, the leverage that you have taken. So obviously the brokerage plus interest on the margin you have to pay. And our product team will definitely give more details about it. So you can reach out our branches and product team. They will help you out to know the exact charges that we are taking for this particular product. So stock specific, we won't be able to comment anything. So the one of the question is about the recent IPO. So we will not comment on any particular stock because of the compliance issue. So yes, there has been some good IPOs which recently got listed and got good response from the after the listing in the on the exchanges. So yes, we will keep on giving our recommendation if we like. And yeah, but right now I won't be able to comment anything on that. So Ravi, it's okay. We have answered the questions which are there. We can conclude this webinar.
Uh, Okay, you want to wait for 1 minute more in case if anybody
Okay,
else
no
has any
issues. Yeah,
queries.
yeah, sure, sure. We will wait.
The questions, comments, queries can be posted here on the chat box on Teams webinar. Thank you. So we have some questions on YouTube Live also. I'll just read out for you. So the question that says, what is the best period to use MTF?
So best period to use MTF is where the momentum is high. If we get good momentum in the market, especially in the broader markets. So right now in this particular scenario, only Nifty stocks are moving up. So churning is not happening. So that is the bit concern right now. So you have to be conservative in this scenario. You can become aggressive when broader markets are performing very well from here. So that is the scenario where you can come out with a more aggressive approach in the MTF category.
So there is one of the audience who says, I'm new joinee with HDFC Securities MTF. Recommended stock less percentage to reach target.
I didn't get you, Ravi. Please come again.
I am new joinee with HDFC MTF. Recommended stock less percentage to reach target.
Yeah, so as I said that we have been conservative in this scenario. It is quite weird situation where Nifty is at all-time high, but churning is not happening in the broader markets. So the intended targets we used to get previously are not getting achieved because of the lack of participation and the volumes. You can see that the exchange volumes in the cash segment is going down drastically day by day. That's what shows that overall picture of the market. As I previously shared the slide, the percentage of stocks about 20, 50, and 100 days moving average are actually below 40%. In year 2021, 2022, this number used to be more than 95%. That means most of the stocks in the markets were participating very well. But here is the scenario like 2018, where only Ritik stocks or Nifty stocks, top 100 stocks used to outperform. And same is getting repeated now after 7, 8 years in 2025, where we can see a movement only in the large cap stocks, especially in the Nifty segment. So the aggressive approach we used to take previously for mid cap, small cap, and broader market is not actually working out. So we have become a bit conservative by in number of calls also, and we are also targeting a smaller targets. The profit of small profits, even if we are getting 3, 4% in some calls, we used to book it in 1 week. So yes, obviously performance has not been that up to the mark because of the market situation, and we try to come out with the large cap stocks nowadays. As I said, Kotak Bank was issued, PSU Bank Bs was issued. So we have changed our approach. And but yes, in this scenario, you can expect lesser return. Sometimes in the this kind of scenario, we have to be conservative. There are less returns, but whenever we see a momentum coming back to the markets, definitely we will try to cover entire underperformance period in that particular momentum phase.
Also, there is seems to be some confusion on the interest percentage. The interest percentage mentioned is per year pro rata basis. How is it calculated?
That the product team and the branch team will definitely help you out. I am not an expert to comment on how it is being charged. I am a research person, so I won't be comment and exactly know the information about it. So that you can reach out to our customer care or our branches. They will definitely help you to know the exact interest that is being and how it is being charged.
Any sector that we would like to recommend?
So time to time we come out with the ETF recommendation. PSU Bank is one of the sector which we continuously like. So PSU Bank you can consider as and not only PSU Bank but entire finance segment, one of the NBFC, private banks, PSU banks. So financials are likely to do well, though there could be some running correction out of in the coming days. But overall, buy on dip should be the view in the PSU segment. And another segment which we are bullish on is the metal sector. So metal is the sector which can do well in the coming times. So metal and banks we like for the on the positional basis.
There's one question which says, can we take delivery of stocks part by part?
Part by part, yes, it will be executed as a separate execution of the particular transaction. So yes, part by part the you can take, but MTF will be charged as a separate transaction on that.
And how to withdraw MTF limit balance?
Ravi, I would
Okay.
rather suggest that this kind of questions will be attended by the product
Oh,
and
okay,
marketing
okay.
as well as the branch team. So that would be better if I don't answer that questions.
Okay. Current market in which stock taken in MTF for 6 months for good profit?
Current market.
Current market in which stock taken in MTF for 6 months for profit?
So basically, as I shared the list of stocks which you have come out, which we have come out, you can utilize that product. HDFC Security Prime Research Department has come around 15 to 17 stocks open as a MTF recommendation. You can utilize all those open calls with the proper risk management and stop loss given in the recommendations. I think we should conclude, Ravi.
Sure. Okay. Thank
Yeah,
you.
thank you everyone to join. Have a nice weekend. Bye bye.